We have some good news today for Tesla stock, relatively speaking. Multiple things. Let's start with deliveries in China. Troy was expecting 12,000. We actually got 11,670, which is just a little bit below that, but relatively speaking, that's within expectations. And then look at BYD. BYD is delivering a lot of vehicles, but keep in mind that includes plug-in hybrids. We don't count those. I'll make a video sometime later, probably comparing BYD's numbers with Tesla's. We do need to pay attention to BYD, or start to pay some attention, but there's nothing to worry about. Not that I see anything serious, really. Now, looking at this, if we asked yesterday a 7-year-old, I think they would have expected a number that's higher than 16,000 because, you can see clearly the number has been going up every single week. So how come we only got a little bit less than 12,000? Well, remember these price cuts in China that Tesla did? That initially generated so much traffic and so many orders. We literally saw a website crash for a little bit now. Interestingly, check this out. This is not the first time this happened, okay? Tesla has been doing this for a while. Every time there's something huge that Tesla does, seemingly the website has some problems. Here's the original tweet showing that the website was actually not working for a little bit. So looking at this, how can I say that it is good news that we hit quite a bit of a lower number right here, 12,000-ish roughly only? Well, we had quite a backlog of orders from that initial price cut, which now I believe we have completely exhausted. So getting 12,000 orders, that is still pretty good, because that means the backlog is probably zero in China. And 12,000 basically deliveries, that shows demand is pretty good in China. I mean, of course, it's not ideal. I would have loved to have seen a 16,000 number right here. That would have been awesome, but we have to be realistic. So all of that was basically neutral news, came in as expected for the most part. This, however, is actually good news. So Gary is saying here that Wall Street analysts have not changed Tesla's estimates for the fourth quarter in terms of earnings per share because of the production cut rumors. And he says that is because they either do not believe the rumors or view the production cut as temporary. Now, I think there's actually a completely different reason why Wall Street is reacting like this, which is all good. You see, I believe the reason why Wall Street is not adjusting its earnings per share estimates for the fourth quarter is because they always looked only at deliveries. They do not care about production. Now, for me, as a long-term investor, production really is the most important thing that I look at. If we cut production, that's something that I do not look forward to exactly. That is telling me that either we are upgrading production lines, which I hope that is what is happening, because we can always export. We can export. Why wouldn't Tesla export the vehicle? So upgrading production lines would make a lot of sense, because we know there are a lot of things that Tesla could be doing better that Tesla simply did not implement yet because production is running at full speed. And if you try to do any upgrades, you will just blow up companies' cash flow if you do it all at once everywhere and you upgrade everything, absolutely every single thing. So it's just not really practical to do it, at least all at once. But if you do see, demand maybe just a little bit slowing down just a little bit, or if you are meeting your numbers and you don't mind slowing down the production a little bit to boost it long term with production upgrades, that is to me completely acceptable, and actually I would encourage that. Here is where I fully agree with Gary that this is a great opportunity for us Tesla stock investors. And I only hold Tesla stock in my stock portfolio. So this to me really matters. Tesla is trading at 31, 32-ish PE. Mind you, we are talking about forward PE. We are talking about next year here. So 30, almost 32, and this is its lowest forward PE since January 2019 when it traded at 28.6. That's crazy. No, also what's crazy, I bought Tesla in early 2019 because I looked at it and I'm like, Tesla is making money. It's making profits. That's what I like. I like profits. I like money in the bank. So let's take a look at this chart. So you got your PE ratio right here. And as you can see, the PE ratio is just going down, which makes the deal better overall. Now, in 2019, of course, we had lower interest rates, but generally the consensus was that Tesla is not going to grow nowhere near as much as most people believe that it will now. I mean, back then, the consensus, especially in 2018, was that it's not going to be that like a crazy huge company. They turned out to be very wrong, just like I believe everyone is going to be so wrong betting against Tesla right now. When we look at this 10 years from now, we'll be like, how did they not see this? Like, you just look at this and you look at this, see the bottom is right here pretty much. I mean, it could, of course, could go down. Stock markets are irrational. But what is very clear to me, this is a good deal, and I am a rather conservative investor. So the good news here is Wall Street does not care about production cuts, basically, because Tesla's production is already fairly high in their view, and they think that Tesla can make more cars than Tesla can sell, basically, at least short term. So that's why they are not adjusting their estimates, because their estimates are at 430,000 deliveries only anyway, and Tesla's guidance is at about 50% year over year growth for deliveries, which has a crazy big gap between what Tesla is saying, Tesla believes it will do, compared to what Wall Street says it is going to do. Here is some more good news. Apple has scaled back its self-driving plans for its future EV and postponed the launch date to 2026 from 2025. Now, Apple has been working on this since 2014. And Apple is known for simplicity in some way. So when it came to name this project that has been failing for a long time, which I think they had an idea that it's going to fail from the beginning. So they fought really hard what to call it. And instead of Titanic, they chose Titan because, it's shorter. So it's more simple. And by the way, the project is not even reported directly to Apple's CEO, Tim Cook. I can't take Apple seriously with their car project when the project is not even reported to the CEO. It used to be, but then it was all scrapped, basically. And the whole thing was restarted multiple times. I made a video about this a few months ago. I have so little faith in Apple pulling it off successfully. I mean, eventually maybe they can do it, but it's going to be really hard. I mean, how come they don't even have a car yet? It's been 8 years. It will soon be 10 years. So you would think that in almost 10 years, by now, they would have a clear prototype. I mean, that's only reasonable, right? But no. It's still in the pre-prototype stage. That whole project has been restarted multiple times. It's a whole complete mess. Even more interestingly, do you know how many employees it takes to keep this mess going, just to keep it going and postponing over and over again? 1,000 right now. They have 1,000 people working on this. And to wrap up, see S&P 500 today went 1.44% down. So anything less than this is great news for Tesla stock. If it dropped like this, that would be great, which interestingly, it matched perfectly because, Tesla is a lot more volatile. So when the markets drop, if Tesla stock does not drop more than the markets significantly more, this is good news for Tesla stock. So this is good. These are 48 reasons why I only own Tesla stock in my stock portfolio. My name is Matt Posius. Like and subscribe if you haven't yet, and I'll see you in the next video. Thank you so much for watching.